We are having Mike Zuzolo back to Connected Farmer after a few weeks, and he's going to comment about the end of the U.S. harvest and some corrections on the commodity markets. Right here on Connected Farmer, your channel to keep you up to date with the latest trends in agriculture and livestock. If you are new here, please make sure you subscribe. So, Mike, we are seeing some corrections in the soybean market, and also the other commodities have followed, like wheat and corn.
Yeah, and we're getting to a point now, Luis, with this price rally that I think the market was probably a little bit nervous. I certainly was getting a little bit nervous about the demand side of the equation because although the shipping rates have fallen back, they're still pretty elevated. And I've noticed a lot of the wheat tenders in particular that are coming out of Algeria and Turkey and other major countries putting on a lot of new tenders. The Black Sea is still getting way too much business, and it seems like that the Europeans and France in particular are getting business, but it's really the Romanians and the Ukrainians and even the Russians are still getting a lot of business. So I felt like we were a little bit priced out of the market too much. And so I was a little bit nervous going into the weekly export sales that came out today. And I felt like they were pretty disappointing. The wheat was up a little bit, like about 20% from the 4 week average, but nothing that really, shows you that we're really gaining a lot of traction if you ask me. But the corn, the beans, the soybean oil, soybean meal, they were all down pretty well. And I think the trade got a little bit nervous. And, it's interesting because although the beans have been rallying, I've seen that the corn and wheat continue to outpace the beans. And what we've seen this last week or so is that the beans have rallied and the corn and wheat have enjoyed that rally and been able to go up sharply, especially the wheat market, being able to, in France, in the Paris futures, getting up to a 14-year high this week before settling back. But the soybeans, I did some number crunching, and since the September 30th stocks report in the end of the third quarter, while the soft red wheat and the hard red wheat are up about 13 or 14%, and the corn is up around 7%, lead month soybeans are only up 0.7% after Thursday's close. So you can still see the feed grains are still trying to ration demand, while the beans feel pretty comfortable that they have an equilibrium of supply and demand. And so this correction, if it's going to take hold going into the Thanksgiving holiday, I would think the beans would be back to the leader to the downside.
Yes, and what do you think of the trade estimates for the U.S. weekly exports?
Yeah, I mean, I think this is where the USDA expectations, I think, are going down. We didn't see much demand drop in the last WASDE report, and that kind of surprised me. But I think with this dollar trading at a 16-month high and the Brazilian currency, the real starting to soften a little bit more, and the Chinese yuan softening a little bit more, I do fear that the demand side of the equation is eventually going to see some destruction. And I think that's the goal of the market, is that, because we still have supply issues. And, one thing that I have to throw in here that's maybe outside the parameters of normal talking is the idea that we're still in this supply weather driven market. I know the supply chain is in the issues with the grain markets. We're probably seeing the end users buy a little extra than they're used to buying. They're not doing just in time. They're probably stocking up a little extra, and that's demand related. But this latest issue with the weather in British Columbia, Canada, where the Vancouver port is shut down, and I can't tell you for sure how many acres are going to be lost, but it looks like there's going to be a substantial amount of acreage lost, and grain storage maybe even lost as well up there. I think that too is catching the market's attention between the Australian rains going into wheat harvest and now what's happened in Canada. I think the market's getting more nervous about the supply side. So I think this is where this whole past 18 months seems to me, yes, we've seen demand pick up, especially in the meat side of the equation, but A lot of weather, a lot of supply continues to be traded in these prices.
And you have traveled to the eastern part of the Corn Belt. So, what have you seen there in terms of crops?
Yeah, I mean, I was out towards the western part of Kansas last week, and pretty much everything is out in the western Corn Belt, and a lot of fall nitrogen and fall field work is being completed. One guy told me today, as a matter of fact, and I believe he was either in he was in Kansas, north of me, close to the Nebraska border, said it was the best position he had been in terms of having enough work done this fall that he would not have much to do at all before planting next spring. Now, as you go east and you cross the Mississippi River, and even in Missouri, you've got some issues. In some areas, they're big issues where you're not getting enough done. And you may even see some loss of soft red winter wheat acres in states like Illinois and Indiana, and maybe even parts of Western Ohio, depending on how cold this weather gets, because that's the big issue. It's not only been wet, but it's now turned very cold for them again. And that's really dragged out some of the harvest in some of these key states that produce soft red winter wheat. But that's kind of the most people, I would say 90% of the clients I work with on both sides of the Corn Belt are within a couple hundred acres of being done. But there are some guys that are really nervous they're not going to get done until after Thanksgiving, and then they're not going to be able to get any wheat drilled.
Okay, and your belief that there's room for another rally on soybeans has to do with the fact that probably Brazil won't have a crop of 140 million metric tons.
Well, I don't know if Brazil factors in as a rally potential for the soybeans right now. I'm actually getting more nervous about the downside in soybeans, Louise. And I did another 10% sale in 21 soybeans. I'm now up to 85% sold in this previous crop that we just harvested. And I started my first 20% in 2022 beans when we crossed over 1260. 1260 November 22 beans futures is my overvalue level for the soybeans based upon the Brazilian crop estimates that I have and the Argentine crop estimates I have. The last 30 days have presented a really better picture for the weather in both countries. It's not perfect, but I think it's a lot better than it was a year ago today. And I think we have to really keep that in mind, and also keep in mind that if the dollar doesn't cool off, that come February, we're going to have a lot of competition on our hands in the form of Brazil, especially. So, my sense and my analysis and the projections for the Brazilian bean crop are always high this time of year as they get ready to plant. So, I do think the Brazilian bean crop will come down, but we are still sitting on nearly 100 million metric tons of world ending stocks, quite a bit more than we had last year at this time. So I still see wheat as the leader to the upside on the inflation front. I still see corn as the leader to the upside on the supply demand fundamentals, especially the supply side for new crop corn acres. And I see soybeans as maybe the weak link between the three at this stage. Now, one thing I'll throw in here, kind of another curveball, as we say, is the soy meal market has taken hold. I think maybe we talked about that a few weeks ago about maybe a low coming in the meal market. And that has happened now. The technicals look good. And a lot of people now are talking about lysine shortages for their hog and poultry, but especially hog mixes. And so they're going to have to feed a lot more soy meal, and that's working into the market mindset and sentiment too. So that supports the market. But at 1260 new crop beans, that is a terrific profit if you don't have any yield problems next year up here in the States.
Yes, and you kind of anticipated my next question is about the meat markets. How big do you think will be the fall in the midterm?
As far as the supply, or how big
The
of a
prices?
how big of a fall in prices? Yeah, this is where the beef is the real issue right now, because China has been such a big buyer of beef, and we've been blessed here in the United States with limited competitors, whether it's because they're rebuilding their herd like they're doing in Australia and Canada, or you've had BSE and Mad Cow in Brazil. Beef has really come on strong in the export market, and it's really given us a boost in the prices. But like the USDA, I feel like we're peaking at this point. The prices are probably rationing demand. Now, the weekly export sales were very strong again today, which was nice to see. But I guess what I would say to you, Luis, is I think the market is banking on the demand staying strong and the supply dropping after the first quarter of 2022. Well, the cattle and feed report that's coming out this Friday afternoon is suggesting, by the Newswire estimates, is suggesting a really, really big placements number. I mean, the average placements number is 102% of last year in October. The highest placements number is almost 105%. Between that and the on feed number already being close to 100%, we could go over 100% on feed after tomorrow's report by USDA. If that happens, then USDA's estimates of beef production here in the States in the first quarter being the peak, and then them dropping the second quarter and the third quarter, that really isn't going to work out that way mathematically, because October placements, especially as heavy as they've been here lately, those will get marketed into the fat cattle market come May. And so that's the second quarter. And so I'm a little bit nervous the second quarter supply will be higher. And if the demand doesn't match up with that, then we really need to get some hedges in place for the first and second quarter. So tomorrow's report's a really key report for me for all of 2022.
So, what are your marketing recommendations for this time?
Right now, as I said, we're working on the soybeans. I want to get some cattle hedged about $2 above the market in both the December and the February contracts. Like I just said a second ago, I would look at the April contracts above 143 if we were not able to see a strong cattle on feed report or a lower supply cattle on feed report. For the wheat, I started marketing wheat about a week or so ago, up to about a third sold in the new crop 22 wheat. I want to be very careful about selling hard red wheat here in the Plain States, because while we have the best year in 5 years for good to excellent conditions, I'm not seeing much rain for the next 30 days, and we're starting to turn dry here again. And I think we could have a real drop in conditions over the winter months if we don't stay have good precipitation, good snow cover, and good rainfall. So I'll focus on soft red wheat and spring wheat as far as hedges, and maybe do more paper positions when it comes to the hard red wheat.
All right, Mike. Hope to see you next week.
We'll be here. Thanks, Louise.